I think there's probably more to this oversold bounce in the markets here in the near term. Could make for a good Q1, but I think it's going to run into not just slowing global economic growth, but slowing earnings growth. We're going to hear after the bell today a number of reports, but remember, it's not just the top line that's slowing down. It's cost pressures that are on the rise. Wages in the U.S. are running at the fastest pace in 10 years. In Germany, they're running at the fastest pace since 1992. Global companies are seeing an overheating environment of slowing top-line growth and rising costs. That means that we could see an earnings recession in the coming quarters, and that can be just as bad for equities as an economic recession.
Rick, what are the key things you're watching in the week ahead? We've got a couple of big auctions coming up.
Yes, we have 3s, 10s, and 30s this week, Wilf, and I think that will be a very important litmus test for the Treasury market in general and investors specifically. You know, rates moving up, and we really did make up some important ground just in a few sessions. You know, we settled the year right in the 268 area. Our low close for the year is around 255. We were testing, getting close to 260 midweek last week, and boom, here we are back very close and once again in the 270s. You look at Europe, you look at France, you even look at the UK fixed income markets. You look at Italy, you look at Germany, you look at the Euro curve, which in essence is the German curve, and what you'll find is rates are really melting. Friday, in many of the bigger economies in Europe, their sovereign debt markets traded at the lowest levels on a closing basis of yield, going all the way back to the fall of 2017. And I think that this is very important. 2016. This is very important to continue to focus on, because I continue to say rising rates too quickly is a negative, but the U.S., whether it's the stock market, the economy, or rates, slow and steady and firm, and I don't suspect a lot of that's going to change. As a matter of fact, the reason I think a good litmus test with these auctions, I think investors are going to be more than willing to gobble up the bigger auctions, even with the rising debt levels, when those investments once purchased and the returns are compared with the alternatives.